Hello to all traders and welcome to our monthly engagement for the US non-farm payrolls. Today is Friday, the 4th of October, and we are expecting September's Nfp data. Before we start, I would like to show you my details to follow on social media and also Twitter and LinkedIn. This is where I post daily videos, trading ideas using TradingView, and also, of course, the market insights, which gives you insights onto the markets, what's happening with the FX, politics, economics, data, policy, and a lot of other, of course, market-related news and tools and things that you should be aware of and before you decide to start your trading day. Before we go ahead with the short presentation and then to the charts, please take a few seconds to read this disclaimer. And then what we're going to do, we're going to go and see the expectations for this month's NFP. We're going to see whether those expectations are actually optimistic, maybe a bit, or pessimistic, and that would, of course, depend on what economic data, incoming data, has shown so far over the past month. And then, of course, we will see what's happening on the charts and which pairs we can expect to move more than some others, so we can actually pick those instead. Filter out the ones that might not be good opportunities, might not offer good opportunities, so that we can pretty much have better chances of at least getting the direction right. So starting with the NFP preview and what analysts are expecting, let me just get my pen for 1 second so that I can draw things around a bit here. So the expectations are for 134K. Last time we had 130K. Now, analysts expect an increase, right? And that increase is 44K. In the previous release, they were expecting a similar forecast, 177, right? Which is pretty close to these month's expectations. But we got a 130. This is 47K below expectations, and it's a big miss, if you ask me. That figure was also much lower than the previous month at 159K. So if you ask me, and taking into consideration, like very, very general view now, the ISM and also ISM non-manufacturing and manufacturing disappointing figures over the past week that we saw, then this might be a bit too optimistic for this NFP. Anyway, now August data, we missed it for 44K, okay? Now there has been a cyclical slowdown in the manufacturing sector, and that hints to a slowing in employment change, okay? However, the economists still expect an expansion on a month-to-month basis, okay? So from 130, we expect to go to 177. This is a big jump. The September's release was worse than August, okay? But know that August NFP was also revised down from 164 to 159K. I mean, the discrepancy is not big. It's like 5K gap, but still it was a downward revision rather than upward, or rather than just remaining neutral. So this is also to be considered. Now, on to the next page. Going into some details, some information regarding unemployment rate and regarding also the average hourly earnings, which is how much people earn while they work. And these are also two very important parts of the NFP report, of the release, and most of them are not, they're being ignored. And this is not a good idea. So starting with the unemployment rate, analysts expected decrease at 3.6. Okay. In September, the analysts missed expectations. Again, they wanted a 3.6, but they received a 3.7. Now, when unemployment is higher, of course, this is worse for the economy because less people are employed, and of course, there is more people that need to take insurance benefits and social benefits, right? Now, in terms of the hourly earnings, they are critical for this report, as for any report, if you ask me, because we are in an environment, dovish environment, where all banks are cutting rates. So it's important to look at how inflation pans out, and for that, of course, it's very important to look at the average hourly earnings, right? Now, we had a poor number. A poor number may even validate further easing, to be honest, right? Now, if this easing comes in a monetary policy perspective, it comes from a fiscal tool and new methods, we don't know yet, but the idea of further easing actually came onto the headlines yesterday a bit more than expected before Thursday, because we got the ISM non-manufacturing, which is the services sector in the US, which equates to about 80% of jobs. So you can imagine with this figure that we got, it was around 52% or so, 52 from a 55 expected, very near to the 50 as well, which is the contraction level. So markets are a bit more cautious now. I'm a bit more worried that if the Fed doesn't act accordingly, fears recession might be just right in the corner. Anyway, previous figure improved by 30 basis points is the truth, okay, from 0.1% to 0.4%, okay, and we haven't seen a 0.4% since March. So the Fed cut in June, if not mistaken, again in September. So is this increase because of this inflation, causing inflation because of lower interest rates? Well, this is something to be seen in the near future. I think it might be too early from June to now to see some results, some effects taking place already. Now, the wage expectations, they're upbeat above 3%, okay? And that hints to future expectations, future inflation. We are expecting a 3.4. The last time we had a 3.2 year on year. Maybe too optimistic or maybe not. I mean, with this increase last time, we can expect that to increase, maybe for 3.2, 3.3, maybe stay at 3.2, which is still a very great number. But 3.4 will still remain, hold our breath and see whether that comes as expected or not. Now, in terms of inflation, the latest data in September, right, they show that the year-on-year CPI inflation fell from 1.8 to 1.7. So here's this link we can do between average hourly earnings, Fed rate cuts, and the actual CPI inflation. We see that we don't really see the Fed rate cuts having an impact on inflation. So we shouldn't associate the good numbers from the average hourly earnings to the rate cut, okay? We missed expectations by 10 basis points last time while the rates were falling, okay? And of course, we remain below the trend line, and it seems like we are trending lower. Now, the CME Fed Watch tool shows a target rate of 72.2%, okay, that the Fed is going to cut again in the next meeting. Now, 72% chance is quite a high number, right? And that might increase actually after the NFP, should the NFP be worse than expected. Now, when we preview the NFP, we need to look at certain indicators, right? There is a number of lagging indicators I like to watch and a number of leading indicators I like to watch, which are for me the most important. The ISM manufacturing, non-manufacturing, the Challenger jobs cuts and jobless claims, the ADP non-farm employment report, the consumer confidence, which is the University of Michigan and also the CBCCI. And then in terms of leading indicators, we can look at the treasury yields and the equities and also the crude oil prices. And why leading? Because we need to look at them just like before the NFP. And this is what shows us the market sentiment ahead of the NFP, which means that if, for example, oil prices are up, the market expectations are somewhat positive. If Treasury yields, the 10-year yield is up, the market sentiment again is bullish, okay? That's the same with equities, okay? So they're positive correlated in this case, okay? Because we're talking about jobs. In other cases, you see these being negatively correlated. But anyway, with this preview, now I want to bring you to the next page, and then which we can see which are the best pairs to trade. And then, for some reason, a page is missing, but not worry about that. I'm going to open my Excel sheet to show you. Actually, I will do that right now. I will show you a table which actually weighs the pros and cons in a table that separates the last round of data, right, and also the lagging and also leading indicators. Now, as you can see, anything that is on the red, it's negative for the NFP. Anything that is on the blue is positive for the NFP. So we see that equities and crude oil show that this NFP is going to be positive. Maybe crude oil and equities are up because we are expecting a higher average earnings, okay? Treasury yields, they are a little bit negative, but this percentage is very, very minimum. So maybe it wouldn't even matter, to be honest. So we've got 4 positives against 2, 4, 6, 8 negatives. So from an economic data perspective and what we've seen over the past few months, the data suggests that this NFP is going to be bad for the US, okay? Now let's close this and let's see how we can choose what pair to trade. There's 2 different ways. One is the one you can see on this table, where we compare interest rates between economies. Now, what we want to do, if we want to buy the NFP, then we want to buy the US dollar. The question is, what are we going to buy against? Okay. Now, talking a little bit behind the market structure, operation-wise and banking-wise, institutions will look into buying, selling pretty much against the least strong central bank. And in our case, this is the Switzerland, okay, because we are at minus 0.75. So if the NFP is good, buying USD CHF would be a very good option. Also, the Canadian dollar against the Swiss franc, because Canada is 1.75, while considering the current market economic structure, the Canadian Bank of Canada has remained on hold for quite a while now, and the economy is still strong. They're not affected by trade wars, whereas the United States, the US dollar, is moving down because the Fed is cutting rates. Now, maybe the Canadian dollar will be a better option in this case. Now, in case, obviously, the NFP is not good, then we're looking to sell, right? So we would want to sell with something strong, right? For example, USD CAD, let's say, right? Where we want to sell that, okay? Or you could look at the USD, Euro dollar, and also the dollar yen as an option. These are always a good option to trade the NFP because this is where most of the volumes are coming through anyway, okay, on a daily basis. Now, the other tool I like to use is called the currency strength meter. And let me just open this table here again. Do I have it somewhere? Let me just check quickly. There we go. So in this slide, we are seeing for some reason that the Swiss franc is very strong, okay? The Aussie and the Kiwi is strong. We want to avoid the exotics, so let's not talk about those. So Swiss franc, Kiwi, and then Aussie are quite strong. So if the NFP is not good, where we want to sell the dollar against one of those three: Aussie, Kiwi, and the Swiss franc. And to be honest, any of those is higher yielding. I mean, the one that is higher yielding compared to the US is the Aussie dollar, because it has a minimum gap, because the Swiss franc has a negative rates, New Zealandian, if I'm not mistaken, is 0.75, and Australia is 1, or is the opposite. So whichever is 1% interest rate, they will go ahead with this. Okay? So, and of course, the weakest one is the dollar, as we speak. Okay? Then the second weak one is the pound. So maybe it would be also a good idea to sell GBP USD if the NFP came out strong. Okay? So, and just a few tips before we go to the charts. If you're not familiar with the NFP and trading in risky environments, you should avoid trading, okay? If you have experience and you feel comfortable, I would always, I want to suggest to use a protective stop loss, and also, of course, a take profit without leaving your trades running up and down in such high volatile and liquid environment. There is, of course, those who already have open positions. You can either close them or hedge them ahead of the release rather than before, right? Now, there's also those who are very eager to trade, but they are a little bit worried because they haven't done it before, they're not too familiar with NFP, or they're even worried that, you know, the markets might react in a way that they're going to risk some capital. So if you're eager to trade, let the storm settle, okay? Give it 5-10 minutes, half an hour, and then you can choose whether you want to trade or not, depending on the signals you get from the NFP and also from the market itself, okay? Now, we analyze the data post-release, okay? So it's important to look at all unemployment data, wage data, and employment data, okay? The markets always move first with the headlines in employment, okay? So just to know that. Also pay attention to the divergence between the actual and the consensus figures, okay? Gaps of 20 and 30K are not really considered much effective. So if the gap between expectations and the actual results is like 20K, we're not gonna see big ranges, markets moving in big ranges, okay? And that's all from my slides. Now, let's go onto the charts, okay? What we will do is we will draw some support and resistances. Let me just actually let's get four nice charts here. I will do euro dollar. Let's do dollar yen. Let's do the Aussie dollar, and also the dollar Swiss franc. Okay, now I like this dollar Swiss franc. You see how strong it is, the Swiss franc. Maybe we can change this to New Zealand. Yeah, it looks a bit stronger. Now, what we want to do, we want to start drawing some support and resistance levels. There is no magic or secret formula to the NFP, okay? You simply have to draw some very good support and resistance levels and then take it from there, okay? So you want to go as close as possible. We want to draw a level right here. Hold on one second, let me just get something better here to draw that horizontal line. There we go. Let me change that as well. Let's make that red, and let's make it a bit fatter. There we go. So 106.48, okay. Now those levels can be used as entry points and also as exit points. It's really up to you how you want to use them. This is the one on the dollar yen. Okay, so on euro dollar, we can have a resistance level or entry level over here, on the downside over here. Now we are on QE. QE, downside, we are looking at that level. And then this level, euro dollar, we may want to tackle one there as well, upside, and then we will move a little bit closer as well, of course, because we don't have a full view with all the ups and downs here. This one can be a good one. This one can be a good one. Now what we want to do on this one, stay a little bit zoomed out. That's another good level. And then we want to get that one out. This one can be over here actually. It's a higher activity level and it should form a better entry in this scenario. Now on dollar yen we have some good levels. What I want to do is throw that one too here to the downside, the upside, because we are indeed a bit too close, too far. Okay, we are at 106.56 and this is like 25 pips higher. We could also draw one over here and move this one a little higher. Okay. Now pay attention, that is, it's normal for people to get into the markets wanting to get 50 pips and 100 pips, okay? I mean, with NFP, the sooner you come in and the sooner you come out, the better, okay? So if you are on a 20 pip gain, just pocket it and let it go. Now, since we're close on that one as well, let's do that one. Okay, so as you can see, drawing support and resistances is quite simple, and it's all you need for NFP trading, okay? And on this one, we want to go high activity. There we go. Okay, so we have quite a few levels now. What I want to do is draw another one on QE. And maybe we can actually get it that up here in terms it goes up. So if it goes down, so let me just get this. This is a neutral zone, if it helps. This is a neutral zone, if it helps. This is also a neutral zone. And on dollar Swiss franc, this is also a neutral zone. So we can go a little bit closer on New Zealand dollar. Okay, move it a little bit further down. Go a little bit closer on euro dollar. And there we go. And on dollar Swiss, we are here as well. Let me just move this a little bit here. This is our neutral zone. On the downside, there isn't much, unless, of course, we do draw another line or move that a little bit lower. Actually, it's better if we just draw a fresh one. And I would throw that one right here. Okay. Now, it's very usual to see markets moving ahead of their results, of course, ahead of the publication. So we're actually looking good here. Okay, so we've got all we need. We've got our neutral zones. We've got some entry and exit points here. You can call if you want, if you wish. Let me just move that a little bit there, over the side, so we can have a clearer chart. And 9, yeah. So I think this is looking quite good now. Okay. And all we have to do now is just wait for the results. That is actually 5 minutes away. Now, while we wait, what we can do is we can go on to euro-dollar, for example, right? And what we can do is we can start using, I'm not sure how familiar you are, most of you have heard, maybe some of you use as well, but if you're new to these, Fibonacci retracement levels, okay? So if we take this last move from there to there, we are actually right at the 50 Fibonacci. But just to get an idea, but because we are really looking at markets, we want to look at it in a different perspective, right? What we want to do is we want to take the Fibonacci from the lowest low of this market, which is the 108.794, and go all the way to the first high, most recent high. Okay, so we've had a three-way move now, and we're expecting prices to move on a technical perspective to the downside. But of course, that means that that would mean that the NFP would be good. Now, since we don't know whether this is the case or not, what we want to do, since we draw that, we want to focus on the 0.5 and also on the 0.618, which is the Fibonacci extension. Golden Fibonacci is called ratio, which is at 109.257. So we'll also just get a line down there as well, delete that, and now we also have an extra level that could be reached. It could be reached, given, of course, the NFP comes out worse than expected. Now, on the upside, what you can do, you can either use the same tool. Okay, let me show you quickly. You can either use the same tool, delete those levels we used because they don't matter at this moment. And what you can do is create a negative value, okay? We want to create a negative value because we're looking at the opposite move, okay? So this one can also be a good level to the upside to draw, and I will actually go ahead and click that, which is another level to the upside, which is far, if you ask me, from the current level that we are now. We are at 0978, 800 to 3010, that will be 50 pips upside, right? It's not seen often, but I wouldn't say that it's rare. It's not much rare. We can see, I mean, normally we see 30 to 40 pips move, which is a normal and quite liquid NFP. Some other times we just see a smaller move, but the 50 and also 60, sometimes even more, is also seen. Now, given that we have a couple of minutes left, let's just have a look on the economic calendar. What I will do, I will put the economic calendar next here so I can watch what's happening, and I don't want to disturb your view on the charts. Okay, so I will be watching what's happening with the NFP. Also, just as I remember, I'm looking at the calendar right now. Don't forget that we are expecting later in the session, right? We're expecting the Fed Chair Powell to speak, right? So any sort of moves might be a little bit contained or limited to certain levels, whether those are round levels or some sort of support or resistance, because we don't know what he's going to talk about. We don't know what he's going to say. We don't know whether he's going to be bullish or bearish. So the markets, they don't want to get ahead of time, you know, and then having to incur some potential losses because of his speech. So we might have some limited moves to the upside or downside, okay, in this event. Now let's see, the time has come, and the results are quite mixed, I would say. Now, the average hourly earnings, they stayed on hold, but not like as expected, they are at zero. So on a month-to-month basis, there was no growth in wages, right? Nothing. The employment change came at 136,000, which is obviously lower than the expected figure, which is also a negative. But the unemployment rate came at 3.5%, okay? Which is a figure not seen for a while. Let me actually go ahead and have a look when we last saw 3.5. I think that will take us quite a few years back. I'm scrolling down. I've reached 2010, nothing yet. For actually, not before 2007. Let me just use a different color that maybe we can get a bit more of history there. Now you can see, for some reason, dollar Swiss franc is moving up. Euro dollar is moving down. Well, it looks like the markets have taken the news with a good eye, but I do really think that that's not going to last. At least the levels that we drew, one is broken, one, second, third nearly, fourth. So you can see the moves are not too big, I would say. Now on to back to the unemployment rate, 3.5, this figure. Let's see, we went back to 2007. Okay, that's also the maximum allowed. So I think we're going to need to look at trading economics, a very very useful economics data website. Let's see what we have here. Okay, so I'm afraid I don't have a view here either. So unemployment rates go down to max. We're looking at, actually that figure looks like to me was seen before in the 1970 or something. Okay. As you can see, markets are reacting a little bit awkwardly, no? The employment change wasn't good. The wages figures were the poorest this year, maybe even for more than just this year. But the unemployment rate hit a multi-decades low, and this is seen as very positive. Now, on other indicators, the participation rate also improved from 62.9 to 63.2. But truth is that that's not really a reason for to see this reaction in the markets. Okay. So I would be a little bit cautious as to how long this momentum is going to last. But to be honest, I don't personally think it's going to last longer. Since we have the results through, all we can do now is actually see how the markets are reacting. You can go ahead and ask any questions if you have any. Can be related, of course, to the NFP, politics, any technical expectations or projections on some pairs, anything that is related to trading, of course, and to the NFP. So dollar yen moved up from 106.631. We definitely hit the first target, and then it went over, as I said, to the round number just above a false break to 107. Very strong psychological level. What I want to see is what's going on with the pound, because it seemed to be quite weak earlier. So we went from 23, actually let's go to the half hour to have a better view, because the event kicked off at 1:30. So it went down 23.41, nearly 40 pips on pound dollar. Euro dollar moved from 9.8 to 9.57, which is less than 40 pips that the pound moved. You see the differences? We talked about the pound being weaker, and as a result, euro dollar lost only 35 pips. Pound dollar lost 40 pips. Okay. And now let's have a quick look on dollar Swiss franc. For the past 30 minutes, we've seen prices go from 99.30 to the first target 99.53, and then close to the second target. Anyway, we're looking at from 3 to 7, nearly 40 pips here as well. And Kiwi, which we said actually is looking quite strong, along with the Swiss franc and along with Aussie, it's at the moment on an hourly chart remains unchanged. It had a spike to the upside, a spike to the downside, and now we are right exactly at where we opened. Now checking the 30 minutes, that seemed like it was the most profitable pair to trade, considering how many trades have been traded actually here up and down, right? From the highs and from the lows. So we went to 63, a false break, a weak attempt to get to the round number, to 63.36, again, less than 40 pips. So the biggest loser so far, the biggest move, let's say, the biggest range was on the pound dollar. Okay. As you can see, the bearish momentum is not too strong. Dollar Swiss franc is also reversing back to the opening of the 30-minute candle, and as expected, the whip show will most likely be completed very shortly. What I want to do now is have a look on some other pairs. Let's have a look on dollar CAD. Okay, dollar CAD looks like it's not moving at all. And that's because, don't forget that I know that was last week actually, yeah. No, the Canadian dollar doesn't move much, which means probably the oil doesn't move much either. So all the higher yielding currencies, the preferable option is actually the Kiwi, okay? That's what it looks like to me. Because it has interest rates in New Zealand are 1%, if not mistaken, which is the second bigger after Canada and US. But it's not, they're not supposed to be falling. I mean, the Australian dollar, the RBA signaled to more cuts or more easing, but RBNZ yet hasn't given any signs that that would mean that the bank is going to cut further. Any sort of guidance, let's call it, which is what it's called, by the way. Gold on the other side, let's see what's happening. Gold is pretty much trading similarly to the US dollar. The US index is bullish, trading to the upside, it's moving up. And this is exactly what I was talking about earlier. If you see that the dollar is moving up, euro dollar is falling, but the Kiwi, if you compared against the DAX, the index, of course, is not really losing as much as one would expect. And S&P, also marginally higher. Aussie dollar as well. We had some moves here. It looks like it's holding quite firmly, but Kiwi is the one to probably also reverse first because it's quite strong, and the other one would be the Swiss franc, dollar Swiss franc. Two pairs that we've actually analyzed in the beginning. We talked about whether they're strong, whether they are weak against the dollar. That was over here. So you see, Swiss franc, Kiwi, and Aussie. Euro, pound, and dollar. Now we saw 35 pip loss, 40 pip loss, right? So you see that depending on the strength, which is pretty much indicating some sort of momentum, right? We're really looking at also what our targets can be, right? So if you see a weak pound, for example, right? And the NFP is good, which is the case now. You have a target in mind that is a bit conservative. You can think that conservative could be, this conservative figure, let's say 20 pips, it could be 25, right? But obviously, that shouldn't affect your risk management or money management method, okay? It should only be seen to protect your capital rather than to try and get more pips, okay? Because the one who tries to get more at the end ends up with losses. So to the contrary is the best example. If we had euro here being strong, okay, or the Aussie, for example, you know that if you trade Aussie dollar, if you sell Aussie dollar at this moment, which is the worst combination to sell, right? You wouldn't want to sell it and get like 30 pips, right? Because, or 40 pips, because it looks like it's a little bit too optimistic in the current market, okay? And the other thing I mentioned before, don't forget we have the Powell's speech later in about 5 hours from now, 6 hours from now. So markets might be a little bit, they might just hold off a bit, see what he's going to say. And then we might see a weekly end of week rush to the upside or downside, depending on whether this is actually supporting the NFP or not, and whether his comments are supporting, in general, a further rate cut, further easing, or we're going to see the same language, which is a wait-and-see approach, which is an approach that seems to be a little bit stubborn at the moment, where all the other economies are falling and signs of contraction and also recession in the US appearing. So markets are becoming a bit more fragile, I would say, and sensitive to what the Fed chair is saying. Let's have a look at the dollar and against the Norwegian krone, because I recall the Norwegian krone was quite strong. The Canadian was okay. So as I said, you know, the weakest one was the pound to look at. Obviously, the dollar, that was, don't forget that this screenshot is before the NFP, right? So keep that in mind. Now, in terms of post-NFP trading, right? For those who want to be a bit more risk averse, what I would suggest for you is to keep an eye what's happening at the hourly close. Okay, so we'll have 13 minutes to that. Now, once we have this candle closing, we're going to have, of course, also the hourly one closing, because it's the end of the hour, right? From there, we can expect 1 hour, 1 second, and 1 hour. From there, we can expect, it's not just one thing that can happen. Obviously, there is a number of things that can happen. So, but I can give you an example here. We can expect prices to start reversing to the upside, okay? Hit the level. We can either stay in a range, move up, or move low, okay? Or we can move lower, hit the level, and then start reversing to the upside for either a rejection here and a continuation to the downside, or for this rejection and continuation, or for prices to move up to here, or we should receive a rejection over here and come down and then move up or move down. So the scenarios are countless here. But here's what I will tell you, what happens normally, right? Normally, we're going to see what we are calling a dead cat bounce, okay? Which means what? Which means that the prices will move lower, then bounce up, and then start moving lower again. But that, of course, would depend not only how this candle closes at the end of this hour, which is in 10 minutes, but it also depends on the next candle, right? Just to give you a better idea of that, let's just widen that a little bit. Let me show you what I mean. Okay, we should be getting the Fibonacci retracement. Okay, let me just place that exactly at that top. Okay, and let me just drag that 50 line over here, make it red so we can see it, and let's do the 61.8 as well. Okay, so you see that prices came down exactly at 61.8, which is the level that we actually drew before. Yeah, and probably also taking out some stops down here, or not. No. So here's what we can expect. the dead cat bounce says that prices will move like here, that come back to the, to the 50 Fibonacci retracement of the hourly candle of the NFP, which is from there to there. Okay, so as you can see, the 50 Fibonacci retracement, let me just delete that quickly. So we are going down to 78.6, then up to the 50 Fibonacci, 1.0976, and then we should be moving lower, or we can actually continue even higher. But the important thing is that this is the dead cat bounce. Boom, 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 right? It's like, imagine of a ball, basketball, you know, rolling, and you know, at some point it will just go down, go down, go down, go. It will lose its momentum, and then it will stay flat until someone picks it up again. Okay, it's the same concept. Now, the dead cat bounce tells us, in this case for euro dollar, for example, that we're going to see prices most likely reversing and moving up, and then here is where we can start looking for further clues, which is between the 1.097 and 1.099. Okay, now the 61.8 is also the opening of this candle. Okay, so if we see this bounce to the upside, the markets are going to push most likely up until this level, because this is where high momentum was inserted in the markets. Okay, so if I put $100 in here, right, and markets go there, in order to take all my profits out, markets and everybody, right, taking all the profits out means that there will be no liquidity from here to there. Okay, this is a triangular a sort of method that, you know, it makes sense from a taking profit perspective, right? If you put 100 and you want to take it out, you know, markets have to reverse all the way back to the level that you inserted these $100, which was the liquidity. Okay. So on this scenario, for those that are a bit more risk averse, I would be looking for prices to start moving a little bit higher, okay, and then look for sells. Now, what we want to pay attention to is what's happening with the golden ratio level, okay, and what's happening with this activity level, which is the 0.9658. If we manage to get a closed candle above this level and above this level, then a correction is going to be probably on its way. If prices move lower and the candle closes below the 61.8, we're most likely going to take out the break-even stops at 0.786 Fibonacci retracement before we start seeing prices move up, which means in this case that our Fibonacci would move down there. Okay, it means that the bearish momentum would be higher, would be stronger. So what we want to look at is we want to also look at the 0.38, okay, because the market is moving in waves. So most likely we'll see that bouncing over 38.2 and then moving lower. And then we should have prices moving all the way up to take out that, okay? So this was also for those who are not, who are a bit more risk averse and don't want to really risk around the NFP release. Now, there's only a few minutes left, so if you have any questions, this is the time to ask, and I will, of course, do my best to respond. I can see a few people here. I hope you're not busy trading, taking risk. Instead, educate yourselves before entering in such risky market. So I'm here to help you with that. If you've got any questions, I'm happy to answer. Let's just check what the main media say about this. Okay. Yes, I mean, there is a headline news saying that, of course, the US labor report was moderate, worse than expected, and with stagnant wage growth, which in my opinion is the one that the market should be paying attention to, not to the unemployment rate. So this is the euro dollar. As I said, we have a few minutes left for this to close the early candle. I would pay attention to whether this is closing below the Fibonacci ratio or manages to close above. Okay, because you might think that it doesn't really matter, but it actually does. Because a close below that level would add more bearish pressures, okay, which means that most likely going to take these stops out at this level. And then I'll be honest, I think personally that we might see that, you know, holding off quite well, but I think that we're going to see quite a few doji candles until the 9 o'clock. Is it 9 o'clock? I think the Fed's speech. So I think we're going to see a few doji candles. Maybe we'll see some with some upside momentum. Maybe we'll see some with some downside momentum. But nevertheless, most likely, the next 4 hours can be expected. They can be expected to be a little bit flat, okay, in a small range, maybe 10, 20 pips or so, unless if, of course, see a full, reversal to the upside, which I doubt being the case, because we expect Fed to speak. So, without further ado, I would like to wish everyone to have a nice weekend. If you have any questions and you're watching this recording, feel free to comment on YouTube or wherever you'll find this video recording. I'll get back to you as soon as I can. And at the same time, don't forget that you can follow me on my social media accounts on Twitter as well as LinkedIn. It's the place where I update the markets and participants and traders with market updates, technicals, trading ideas, and also, of course, we also produce podcasts, all, of course, to help you with your trading strategy. And understanding what really moves the markets.